Welcome to Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon, and today we're going to have our weekly strategy roundtable discussion where we talk about current market conditions, answer any questions you might have, and to decide what to expect end of this year. We only have 3 weeks left, and what to expect next year. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first Horizon Scanner. Christopher, not sure if you guys are new or not, but if you are new, say hello. But that's my experience. I've been trading my own money for over 15 years. My background is technology. I was an executive of several startups, fintech startups here in Chicago, in hedge fund space, in broker-dealer space. And when the company went public, I decided I'm going to manage my own money and hired a team of financial engineers to build models, provide signals in the market, and then I trade these signals for myself. So that's my experience. And then we have now Keith, who's a market maker, has very strong background. I think he has master's or PhD in mathematics, so very mathematically inclined market maker. So you have exposure to his skills as well. Disclosures are very important. Please read them. Christopher, new subscriber. Welcome, Christopher. I'm glad you can make it. Thank you for joining. Ed, welcome. Horizon Scanner, let me know if you're new or not. RK, I don't know, we have more people coming up. All right, so disclosures are important, especially if you're new, and this is the first broadcast. I encourage you either watch the recording or pause the screen, visit the link, options clearing, so you can understand the risk associated with trading stock or options, right? And the remaining disclosure basically means that I'm not an advisor. I'm here to show you what I do in my own account, based on my own risk, talents, level, for general education and information purposes only, right? We have this discussion today in live trading where someone asked me like, what point should I exit this position, right? Like, I can't tell you when you should exit your position. I can tell you when I exit my position, and I can show it to you, and I can send you a text message, and I can send you an email. But if you trade in something that I'm not in, right? I can't tell you when to exit, right? I can just give you some guidelines, but I can't. We're all different, right? So that is the bottom line of this disclosures, right? You can see what I do real time, right, through the SMS messages, through the website, but I cannot give you an advice, right? I can't tell you like go buy Bitcoin and because it's going to 200,000 and sell it at 200,000. Like I can't tell you that. I can tell you what I do with Bitcoin, but that's about it. So that's important disclosure. So hopefully that makes sense. All right. So before we jump into a trading plan, and let's talk about market conditions. Again, if you follow my broadcasts, I'm more of a top to bottom approach, right? I mean, yes, it's important where Bitcoin is going and what Nvidia is doing, right? But more important is what the interest rates are doing, right? And after unemployment data, interest rates continue to go lower, right? It looks like more jobs were created, but participation is slowing down. Wages actually stable, but participation is slowing down, and it takes longer for people to find jobs. There's less job openings, right? And there's more people per job opening, right? So the trend has been the employment market is cooling, but Paul had a speech this week and says we're within reaching distance of dual mandate, the lending conditions are becoming less and less restrictive. So interest rates are dropping. That's good, right? They were overbought going after the elections because everybody was afraid that new administration will impose higher tariffs. That news is behind us, even though nobody knows what they will or will not do. But this was one of those buy on the rumors, right? Sell on the news. And that's positive for the market. And same can be said about dollar, right? This is very strong move in the dollar, it pulling back. That gives kind of a tailwind to the markets, right? That gives tailwinds to the markets, the currency and the dollar and the interest rates. Value stocks continue to go higher, right? We have a pattern of higher lows, including Dow Jones. So that's one of the discussions, is the next year is going to be the year of technology. The leaders that led the market in the past 2 years, your QQQs of the world, right, Mega 7 and Nvidia, Microsoft, or will it be, small caps, mid caps, banks, and the value stocks? That discussion continues. I think right now, short term, medium term, value stocks are outperforming. They're breaking out to the higher highs, higher lows before the QQQ. But in the past couple of days, is the QQQ leading the market, right? QQQ is breaking out and making new highs. So I think you want to have exposure to both, right? When one gets oversold, maybe you want to buy it. When the other gets oversold, you want to buy it. But QQQ is breaking out, value stocks are breaking out. You have participation in small caps, at all-time highs. Medium caps are at all-time highs. So all of that is positive for the market, right? Bitcoin broke through 100,000. That's positive, right? We were at 104. Briefly, let's see if that breakout is sustainable. Even Nvidia, right? Even Nvidia now is almost at all-time high, which is also positive. Right? We're very close to all-time high. The only head scratcher, I think, right now is semiconductors, right? SMH led the market in the past couple of years. Usually it leads the market on the way up, and now it's underperforming since July, right? Vastly underperforming. That is probably number one bear argument from the bears, right? Why is semiconductors underperforming? They used to argue, why is the yield at 4.5% when inflation is probably coming back? Now the yield is kind of, at least temporarily, is not a concern. So the only concern is semiconductors. But while they have this concern, markets continue to go higher. So Goldman Sachs projected, I think 10%, another 10% rally. Most of the bulls or bullish firms kind of same projections as they did last year. Somewhere between 10 and 20% rally next year. That's 670, 720, right, on S&P, SPY. 10%, 15% rally. Without doing any macroeconomic analysis, the model basically says that it agrees with Goldman Sachs, right? Our model, if you look at the next 6 months, basically says you shouldn't be surprised if the market reaches 720, right? 720, 660. So 10% up, maybe even somewhere between 10 and 15% up. If things continue the way they are, and Goldman Sachs is correct, and soft landing, and interest rates are stable, and we don't have wars, and blah, 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 blah. Right? But if the soft landing narrative is the main narrative, and it stays like that, and interest rates continue to go lower, just like they have been in the past year or so, then that bodes well with another bullish year. So momentum has increased after elections. For this year, for December, projecting 617, January 617, but then usually February, March is when it gets bullish, and assuming we don't have any new tail risks. There's always tail risk, always some kind of a black swan event. Assuming there's no black swan event, then that's the pattern for the next year based on the model. But it adjusts every month, first of the month. So I encourage you to continue looking at the model and just see where we're going. Andre, Christopher, Don, Ed, Horizon Scanner, Mark, RK, Virus, John, Fred, welcome. Thank you for participating. So that's what the model is predicting. If you look at the gamma exposure, right? Let's look at, I guess let's look at June of 25 and January, right? Sorry, wrong ticker. Let's go into June. Let's go into January. Okay, so if you look just at options data where we anticipate, right? So 10% by June, and then 11%. So based on the options data, about 11% to the upside. You do have a lot of positioning in these strikes, right? From 620 now, gamma is increasing 625, right? In June or September, actually. Not a huge gamma. This is 37 million, right? If you look at 600, you know, if you look at the positioning now, 610, it's higher, right? If you include, you know, I mean, this is very low. Gamma, but basically based on the options data, that's the projected move, somewhere 10 to 15%. Okay, so we continue to make new highs, another record high today at 608. So let's decide. So one scenario, let's see, let's so there. Well, we don't need to do 6 months. Usually we do short-term trading. So let's do January. So let's take out December. We'll take December. Let's talk about December, January. Let's do January, February. Now let's look in the next 2 months. Expiration. So the highest strike is 615. One standard deviation move is 625, right? So one scenario we are revisiting. We move 1%, you know, 2 to 3% higher, somewhere between 625 and 630, right? So that's one data point. You do have a pretty high support at 605, not a lot of support. 50-day moving average is somewhere between 585, 590. So let's do 585 to 630, right? 585 to 630 in the next couple months. So on one hand, in the next 2 months, we revisit the lows, right? Kind of this gap after the elections, right? And the October high. This is medium-term strong support, 585, right? That's one level. And the other level is 630, right? 630 by February, right? We're talking about February. So 630, 585 on the downside. So scenario number one, no, earnings are going to be strong, right? We have next catalyst is earnings in January, right? A lot of expectation that analysts are underestimating the earnings growth due to artificial intelligence, right? We see stocks like Palantir and Nvidia continue to grind higher. So we're going to be above 630, right? We're going to move more than one standard deviation in January, February, right? Scenario number one. Scenario number two, no, we're just going to trade in this range, right? Kind of higher highs, higher lows, something like that, right? That's scenario number two. And then scenario number three, maybe some signs of recession. Maybe unemployment ticks up at a higher rate than it did in December and November. November and October. Maybe earnings is not as strong as everybody anticipated. Maybe signs of inflation, right? Rates go up above 450, or signs of recession, rates drop below 350, right? And then you have scenario number three. So as a trader or as an investor, when you look in the next couple of months, you have to make that decision, right? Because if you think it's one, well, then you need to lower your cash and start buying, you know, the risk on asset classes. If you think scenario number two, you could be bullish, right? But you kind of can buy in the pullbacks, wait for pullbacks, and build more, you know, bullish bias, but more, you know, have some kind of a hedges, right? Vertical spread, or maybe mirrored puts, right? You buy puts for the stock, or if you don't trade options, you can have maybe inverse. One of your positions could be inverse ETF, right? Because you think that spiders will pull back, but you hedge. And then obviously it's scenario number three, then you need to raise your cash levels, right? If average is 30%, maybe you should be 50% in cash, right? Or 60% in cash. because you think scenario number 3 is going to occur. All right, so how many of you think scenario 1, we're moving beyond 1 standard deviation move by February, right? Above, we're going to get above 630. Scenario number 2, no, we're going to be in the range. Yeah, we could make new highs, 610, 615, 625, but we're also going to have pullbacks, 600, 590, 595. And scenario number 3, signs of recession are coming back, and we're going to breach this post-election gap, right? And break below 580. Mark 2, all right. 2, but 3 is possible too. All right, anyone else? Anyone thinks 1 and 3? Most of you say 2. Anybody thinks 1? NVIDIA is gonna, well, we're not gonna have NVIDIA earnings by end of February. Or maybe we do. Maybe we do. I think it is the end of February. Yeah, so maybe NVIDIA is gonna hit a home run. Maybe, Pelletier is gonna continue to push the market higher. 2, 2, 2. Okay, everybody's 2. Okay, I'm gonna go with 2 too, right? I think it's a pattern of higher highs and higher lows. I don't think we're gonna breach the gap, post-earnings gap, post-elections gap, unless, some kind of a black swan event. And for now, it's a pattern of higher highs and higher lows. And that's an important exercise, right? One, to determine how much cash should you have and the position size, right? In the live trading room, I always say, you could say 2 and we can have 1, right? You could say, 1 and we can have 3. All of those scenarios can happen, and you have to be ready for them. As long as you have the right number of positions and position size, then you will make the right decisions. If you have too many positions, or you're allocating too much money to Bitcoin or Twilio, right? Then it could be an issue, right? Because when, it's not a matter of if, right? It's just a matter of when. When we do have next, I think last year we had 10% pullback, right? July, August, we pulled back 10%. So, when we do have these 10 to 15% pullbacks, that's considered to be normal in any, especially mature bull market that's been going vertically for the past 2 years. When the market does pull back 10 to 15%, you want to be opportunistic and buy, right? But the only way you can do this if you have the right position size and number of positions, right? So that's kind of the bottom line, what the trading is all about, right? It's not just learning trying to predict what the market will do, but also predicting what you will do. How did you do when the market dropped 10%, right? If you were buying and your portfolio is increasing, then, that means that you had the right number of position size. That's all it means. If you capitulated, right, or your drawdown was, very high and you're still recovering from that pullback, that means all it means is that you have too many positions, right? It doesn't mean that, Tradespoon gave you bad signals, or CNBC contributor told you to buy, Google, but Google is down. No, you decided to have too many positions, or position size is inappropriate, right? That is very important, right? That is very important to understand. So that's nice and wonderful, but why are we here? How can Tradespoon help? So first of all, we have different services, right? So there are a lot of people that have experience, right? There are a lot of people that have experience and they just need tools, right? You don't have access to, Goldman Sachs research, right? Or you don't have access to large hedge funds that give you these signals, right? And you have to give them, $500,000, $1 million to manage. But you want that type of signals, then you have these services like Active Trader, Weekly Trader, right? Every day, it's an AI, right? Very similar to what hedge funds are doing. These are, people who develop this, and it's the same, similar approaches, right? You have data sets, you feed it into the models learn, models train, then they make a prediction, they backtest, and they give you, the quality of the signals, right? So that's the services we provide: Active Trader, Weekly Trader, Monthly Trader. Hedge funds have these quants, they build these models, short-term, long-term, medium, and then they give it to traders, right? They give it to traders, right, and they trade it, right? Traders don't go back to the quants and say, hey, the signal sucks. No, they don't do that, right? it's been tested, it's been modeled, it gives you usually quality, especially successful hedge funds, quality signals, and then and then trader has to make a decision, right? So that's active trader. We give you signals, Costco, Citigroup, CRM. We do give you suggested entry and exit prices, but then you have to make a decision when you want to enter the trade. Let's say Costco, the first one, buy at 973, split your trade into a half, right? The risk, your gain, you're looking for 1% move, right? So 1% move to the upside, 1% move to the downside. And I encourage you to split the trade in two if you're doing day trading. Today we had a question in the live trading room, based on the signal, I think it was, what was it, signal we had? Chipotle Group, right, CMG. One of the subscribers was up 2%, and she's basically saying, like, what should I do? Well, the model says 1% up, 1% down, right? You're up 2%. The model basically says you should have been, but then it's your choice, right? If you're holding Costco beyond 1%, let's say it's 995 now, right? What did happen to Costco today? What did we open? 984, right? So let's say, right? So let's say you waited, usually I wait 15 minutes and you got in 984, right? Yeah, 982, 984, right? 995, the model basically says, we achieve 1% gain, right? The model based on this scenario. But then you might want to say, well, you know what, Costco is breaking out, right? Maybe I should close half of the position and wait till it keeps going higher, right? So then, you hold the position longer. These are just the suggested entry and exit prices. This doesn't tell you this is what you should be doing. For that, you need to have your own trading plan, right? And trade your trading plan using these signals, right? We do have one-on-one coaching, so you can click on the one-on-one coaching, and somebody who's has years of experience in trading, coaching, right? Has seen different personalities, different people. They will guide you through this process. I mean, obviously it takes time and money, commitment, both financial commitment and time commitment, but that's how you can actually learn what do you do, when do you exit, when do you, it'll teach you how to make that decision, not rely on AI, right? AI just gives you signal and suggested entry and exit prices. Some of these signals I trade, right? And Keith trades. So if you want to know what I trade, like when I get in and when I get out, then you can sign up for Elite Circle, right? You can enter your phone number, and then it will tell you when I enter and when I exit, right? Like today, I'm in Twilio, right? So I bought Twilio. I trimmed Amazon position. I'm trying to get out of United Airline spread, right? This way, you have access to real-time data, and you know when Vlad will enter, when Vlad will exit, and then you can just follow along, right? That's totally fine, right? But if you have CMG and I don't have a CMG, and that was a signal, right? Then the best thing is to either have one-on-one coaching or participate in live trading room. You're welcome to join live trading room and ask a question. You just can't, like if I was in CMG, what would Vlad do? And I'd be more than happy to do that, right? I'll be more than happy to do that. So Elite Circle gives you access to Morning Bell and Closing Bell. You have access to Vlad. I've been trading for over 20 years. Keith has been trading almost 20 years. My background is technology. His background is math and market making. So you have exposure to, 40 years of, almost 50 years of experience trading, right? So that's a plus, right? That's the Morning Bell and Closing Bell. And then you have exposure to the models, right? Weekly trader, active trader. And you can enter your phone and get an SMS message, or just go to the site, and at any given point, you can click on Positions tab, you can click on Elite Orders tab and see my positions and my orders, right? And see what I do. So that's Elite Circle. Active Trader is the model, right? It basically tells you, okay, here's the stock signals, how to, what to do with them. Or if you're not comfortable trading, invest in, $962, you want to limit you can buy one contract for $11, right? And this way you only risking $1,000 as opposed to $96,000. But you buy weekly options and you have to be correct on timing, right? But the exit is the same, 962.5 plus 11. This is 973 and plus 29, that 982. So you can buy stock at 982, or you can buy weekly options 962 for $20. Obviously, you're risking 100 shares times 20. You're risking $2,000. It might not be appropriate if you only have $2,000 in your account, right? But if you have $20,000 or $50,000, maybe it is. But you have to be correct on timing, right? You have to be correct that by end of the today, you're doing day trading. If you're not comfortable doing day trading, then you can go into the next weekly expiration, or you can go to monthly expiration, right? And then kind of have a similar trade. If it does gap up, let's say, what else? What's the other one example from today? So we talked about Costco. Let's say Citigroup, right? Citigroup. So suggested entry price was, let's see, stock, Citigroup. Either 71.40 or 72.20, 71.40, 72. This is based on predicted low price, and this is based on the yesterday's close. So let's go to Citigroup. Let's see what happened to Citigroup. So you wait 15 minutes, right? So somewhere 72.20, right? You either buy at 72.20, or if you see pre-market Citigroup was down because of the unemployment data, then you wait for 71.40. Let's say you decided to wait for 71.40, it hasn't entered, right? What do you do, right? So I mean, then you have to basically make a decision. Do you wait for this price, or you follow your trading plan? Usually I wait 15 minutes, right? So I would wait till 72.11 or 72.20 and enter this price. So now I would be down 20 cents, right? So you can make these adjustments, but you would be doing this on your own, right? Sometimes it gaps up, like here we had a signal, I think on Tuesday too, and it gap up, and then the question, what do you do? So same thing, you participate in live trading room, you ask a question, or you try to be consistent, right? You always wait 15 minutes, and then after 15 minutes, you enter the trade. Right? Any questions? RK active trader, weekly trade. Yeah, for day trading, active trader. I don't usually buy and sell. Like today I did Twilio, right? I mean, most of the time, I mean, sometimes I do exit, I'll get that 1% move, or in this case, 2% move, right? But more often than not, where's Twilio? More often than not, I'm not. But for if you are a day trader and you're looking for short-term signal, definitely Twilio. Oh, sorry, not Twilio. Definitely active trader. Definitely active trader, and you can join Elite Circle, right? And you can always ask questions about the model, and I will help you answer them. RK, thank you. You did Twilio today, just exited. Very good. Right. So if you're doing day trading and you already gain your, usually I would same thing, wait 15 minutes. I mean, every day trader has different plans, right? But you wait 15 minutes and then you enter. I mean, at this point you break even. I assume you waited for pullback. Then yeah, then you're in the trade. But these are signals that model generates, and it generates every day, right? And every day, right? Hence it's day trading, right? You don't want signals from a week ago. You want so every day there's a signal you can watch. Okay, what was the signal yesterday? PayPal, same thing. PayPal, Citigroup, Twilio again. So then you day trade these signals, right? So okay, yes, then active trader is the way to go. Do I not? 0 days till expiration options on spiders has been a very popular. That what drives the market, actually gives that liquidity, gives that hedging. So 0 days till expiration is very popular options. There's no right or wrong. I don't trade them personally because I'm not a day trader. I mean, I can day trade, but I just don't have time. to kind of, I have other commitments. But you know, you can definitely look at the exposures, right? Like you can see 610 strike is very high gamma, right? If you just do 1206 expiration, which is today, right? So you know you have a very high gamma at 610. It will try to gravitate towards 610. You will already escape 608, right? And obviously, I think these tools are useful. I would encourage you, if you're a day trader, to look at the spiders. Model is doing good job, right? Letter grade B. So 80% of the time, the model is correct to give you the support and resistance for spiders. Obviously, we have unemployment data today, so we're trading higher because it's favorable. If it was unfavorable, it would be lower. But if we did not have an event, and if we did not, most of the time we don't have these large events like unemployment or Fed decision, the model holds. So at 604, 608, if you're day trader, this is where, or even if you trade in futures, I mean, it doesn't matter, right? You can trade S&P mini futures, you can trade SPX, highly correlated classes, right? You can see at 609, it's overbought, model is correct. You probably want to trim position. If it gets to 604, if it never got to 604, but if it gets to 604, you probably want to go long, right? If you're a day trader. So I encourage you, if you're doing day trading, doesn't matter what instrument you're day trading, right? QQQ, S&P mini futures, currencies, whatever, right? You can use these proxies, ETF proxies, to help you determine the range for today, right? And this is very valuable information. If 80% of the time the model is right, then you know this is very important for day trading, and I encourage you to use that. And you can use it for 0 days till expiration as well, right? 0 days till expiration options. Don't I do 0 days till expiration at all? I don't, right? The 0 days till expiration options, you have to day trade them, right? And I have several businesses that I'm managing, so I can't watch the market. But I mean, it's a lot of fun. But you have to be very careful, right? You have to be very careful when you do that. But they're very popular, right? They're very well positioned. I would encourage you to look at these gamma levels when you do 0 days till expiration, and kind of see where your support and resistance levels are, right? You have 608 strikes, 607, 606, 605. So the model basically shows you, right? These are your pressure points and where people are positioning. You can look at the volume. But yeah, it is very popular. People buy, they wait 15 minutes. Some people buy calls and make sure it moves higher, or they sell puts. There's different ways of doing this. But you have to be at your screen at least for an hour, kind of watching this. Christopher, thank you. RK, yeah, okay. When I'm not busy, then usually I do small trades on 0 days till, more kind of a fun. But if you're a day trader and this is your full-time job, then totally fine. And I would encourage you to use this model. I think it's very helpful for day traders because it gives you the pressure points and you know where support and resistance are. Just another guideline. All right, 10:07. Any questions? All right. So if you day trading, active trader, if you're short-term aggressive trader, active trader, right? If you're holding position a couple of days, if you're doing weekly expirations, right? Some people trade 0 days till expiration, some people trade weekly options, and this is active trader, right? Weekly trader, you can also do weekly options, right? Or you can hold them for a couple of weeks, monthly, obviously monthly options. Options or stock, right? This is just a time frame, right? This is less than 5 days. This is less than 10 trading session, less than 5 trading session. Monthly is a couple months you hold in positions. So these are the signals. And then if you want to know what I trade, then you have Elite Circle, you have Robo Investor where I only trade stocks. You have Premium Portfolio where I only trade spreads, right? Premium spread, I only trade spreads. Shadow and Elite, I give example of everything, right? I give example of stock trade, option trade, short-term trade, long-term trades. So that's, I mean, we do have other tools like research. People find seasonality is important. You know, right now S&P moves 75% correlation with historical moves. So really highly correlated, basically showing that Christmas rally probably already started, right? A little bit early, but already started, and you know, pattern of higher highs, higher lows. Or you can look at the probability calculator, right? Kind of the same thing. Basically says, you know, next 50 days, expect 595 to be support, 617 overhead resistance, right? And gives you, you know, one standard deviation move. So we do have screeners, research, stock forecast. Stock forecast toolbox, I like it because you can look at, let's say you want to see which sectors are outperforming, right, based on our model. What's happening? Something with my browser. Okay. So you can see banking, like 70% banking, right? Momentum, right? This is kind of also looks at the momentum. So if I want to invest, maybe banks, you know, some of the semiconductors like NVIDIA is still, financial services, right? Your credit cards, your investment banking is strong. Insurance is strong, right? Leisure, right? Transportation, that's in strong momentum. Some of the metals and miners are in strong momentum, and so on and so forth, right? You can drill into these sectors, right? If you want to see, let's see, banking, you can look at the regional banks and kind of tell you which one are doing well, right? FITB. Okay, so FITB has a strong momentum, right, to the upside. So that's how you would use these tools. Yeah, RK live trading room is every day. So we have morning session and closing session. So we usually start, you know, 15 minutes before the opening bell. So 8:15 Chicago time, 9:15 Eastern time. Closing bell is usually the last hour of the session. So morning bell and closing bell. Yeah, so every day morning bell and closing bell, and you can watch the recordings here. How's United Healthcare after CEO assassination? I mean, I don't usually look at the macroeconomic, I mean, fundamental of the individual stock. I mean, obviously, you know, it's significantly down, but assassination happened before, right? But, you know, healthcare has been very volatile, right, because of the healthcare cost. So you do have these large moves up and down. You know, but, you know, if you look at Humana, I don't think it's going to look much different. It's actually weaker, right? So, I mean, you have the obviously CEO issues, but there's underlying currents with Obamacare and cost of healthcare provider and new administration. It's in, you know, the entire healthcare sector is kind of in crosswinds, right? You have a sharp pullback in healthcare. As soon as, you know, you had a red sweep, like end of September, October, just, you know, healthcare has been under pressure across the board, not just UNH. You think the most important, such as moving average MACD? I mean, for traditional technical analysis, I would just, I mean, I think chart patterns are important, right? Like ascending, descending triangles, right? If you have an ascending triangle right here, that's important. So chart patterns, you know, head and shoulders, you know, flag formation, you know, continuation. So that's important. I use Bollinger Bands because I want to know historical volatility. I want to know where the 50-day moving average, I want to know where 200-day moving average, and I want to see Bollinger Bands. I mean, I do look at the volume. I mean, RSI is important. Like, I like our chart for traditional. If you look at the like MACDs, like you mentioned, MACDs are important. A lot of people looked at the MACD. A lot of people look at the ADI, right? Ascending, descending indicators. So, and then a Fisher transform, right? Kind of to see if if the market is really overbought, right? So we're overbought, but not historically high levels, right? So, but you learn few of them and then just follow along, right? But Bollinger Band MACDs are very important, like these crossovers that's been popular. RSI is popular. ADI, right? People look at ADI. For day trading, they use like range indicator. Not analog divider, but ascending, descending. All right. What else? Any other questions? Okay, thank you. All right, guys. Encourage you to try it out. We do have 30-day money back guarantee. If you're interested, we have a tools membership, right? You can try that. We have a elite circle, 30-day free trial. If it fits your style, great. If it doesn't, we do give you money back guarantee. All right, thank you very much and have a great day.